Our next guest is warning that cryptocurrencies could lead the charge into the next financial crisis. Brett Heath is the CEO of Metalla Royalty. Brett, it's your first time on Kitco. Welcome.
Thanks for having me, David.
So let's start by elaborating on the statement I just made, or the statement you presented to me. Cryptocurrencies could lead the charge into the next financial crisis. First of all, help us define what you mean by a financial crisis and walk us through why cryptocurrencies could be responsible.
Sure. Well, and that sounds like a bold statement, but if you're a student of history, it actually makes a lot of sense, because when you look back the last few decades and you look at all of the financial crises that happened, they all have a couple things in common. And one of them is the mass adoption of a new financial product or a new technology that's not very well understood. And if we just rewind to the mortgage crisis of 2008, what happened there? We had the mass adoption of mortgage-backed securities, collateralized debt, and loan obligations. And once the public had embraced this new financial product and it crashed, there was a huge problem that had repercussions out through the entire world. And if you rewind even further, and if you look at the tech crash in the early 2000s, it was the same type of situation. You had a new technology that no doubt changed the world, but it wasn't very well understood. And so you had tech companies pop up all over the place that were actually worth nothing, and they ultimately resulted to their intrinsic value, which was zero. And when you look at cryptocurrencies today, I think the best way to explain it, which no one's really talking about, is cryptocurrencies, which are actually crypto assets. They're not really currencies the way the government treats them, but let's call them cryptocurrencies. They are a license for the private sector to print money. I mean, that's the reality of what they are. And if you just look at M1, which is total money in circulation since January of 2020, M1 has increased, according to the Federal Reserve, by 4.5 times. That's an extraordinary increase in such a short period of time. But if you look at cryptocurrencies and the total market cap of cryptocurrencies, it's over tenfold. And so that is a very important fact to understand, because are these things really that rare? My friends that own a lot of cryptocurrencies and they own a lot of Bitcoin, they tell me it's rare because there's only going to be 21 million of them. My answer back to them is, what about the other 10,000 cryptocurrencies, related tokens and coins that exist today, many of which have better technology, better privacy, and use a lot less energy? That's another thing that's never discussed. I mean, I've seen studies where it takes 2 to 3 times the amount of energy to mine $1 of Bitcoin versus $1 of gold. So this is the type of situation where it has the recipe to create a pretty significant financial panic when who knows how high it goes. I mean, the crypto market could, we've seen it go upwards of 3 trillion. It could be 4 trillion, 5 trillion, 10 trillion. I mean, you really just don't know how high it goes. But when you have that amount of capital wiped out of digital wallets across the globe, you better believe there's going to be some significant financial repercussions that are felt.
Well, okay, why would it be wiped out? You brought up 2008 as a parallel. Back then, like you said, MBS products were new, and they led the charge in the collapse of the financial system back then, or several financial institutions, not the entire system, but several financial institutions. What's going to happen this time, Brett? Walk us through the logic from having cryptocurrencies come into the market to a financial system-wide collapse. What's the gap there?
Well, David, it's not really a gap. It's just an endless supply. And that's what people need to wrap their heads around, because not only are there 10,000 cryptocurrencies, coins and tokens that exist today, but there's going to be 10,000 more tomorrow. I mean, not exactly tomorrow, but over the next few years. Right. And what we're seeing is continued advancements in the technology. So if you look at Bitcoin, I mean, Bitcoin is similar to like the MS-DOS. Yes, computers changed the world. Internet changed the world. There's no doubt in my mind that the blockchain technology and the related applications will change the world. But what we have today is we have an endless supply of cryptocurrencies and more coming with the same attributes and the same technology. They might not have the same liquidity yet, but they're much actually better than the ones that exist today. So there will be some that rise from the ashes. Just as with the tech crash, you had Apple and Google and Amazon, become the largest companies in the world. I mean, there's no doubt in my mind that there will be some big winners here. But my alarm bell is that there's an endless supply of these things, and when there's so much, what's the value, or what's really that intrinsic value when the majority of them have no utility?
So let me try to summarize, if I could. So what you're saying is there's so much supply that you're comparing our current situation to the tech bubble of 1999, 2000, and so eventually investors will realize there's no value inherently to be attributed to any of these cryptocurrencies, and so they're just going to sell off like what we saw in 2001 for the tech companies. Is that more or less the narrative here, Brett?
David, if you own the Mona Lisa,
sure.
And the reason why it's so valuable is because there's only one, right? You can't recreate that. But when you own an asset like
I
Bitcoin,
can make an NFT of it now. I can make an NFT.
But when you own an asset like Bitcoin, the reality is that can be recreated. That will be recreated in a much better way, probably hundreds of times. And so if there are 100 or 1,000 different options that are actually provide better utility than Bitcoin in the future, well, what's the ultimate value of what Bitcoin? And I'm singling out Bitcoin because it's the most popular one, but this could apply to any of these cryptocurrencies, and no one's really talking about this. Sure. And I think it's something that needs to be considered.
Well, Brett, if you're right, there are superior coins out there in terms of what they offer for whatever use case they have. Why is Bitcoin though still the largest coin in market cap? Why aren't people already taking money out and putting them into these technologically superior altcoins?
Well, I mean, that's a great question, but I think the right question that you want to be asking here is where can we take refuge in the form of something that's digital but has value, something that has some of these great attributes but still has a lot of value. And what I do with my own money is own the ultimate form of digital gold, and that's gold royalty companies. I mean, governments can't take the gold, people can't steal it. You can own it from your cell phone in any Robinhood, Schwab account, just like any other stock. And the asset class can't be demonized. It's a security, which is the most widely held asset class on the planet. Yet it represents gold in the ground that's quantified on title and is being pulled out by the largest public companies in the world across the safest jurisdictions. And so, I can't imagine a safer asset class to basically take refuge in as we move forward into what I think will eventually be a pretty major crisis.
Okay, explain to us how a gold royalty company works. How does it generate cash flow? Just the basics of the business model.
Well, it's very simple. If you own an interest in the asset that's on title, so every ounce of gold that comes out of the ground, you get 1 or 2 or 3%. And when you own hundreds of these royalties across the safest jurisdictions in the world, governments can't take it. It's extremely complicated to pull the gold out of the ground, or at least governments in the jurisdictions that we operate in. And people can't steal it because oftentimes it's shipped out by airplane, by helicopter. It's insured, and it goes to the refiner. It gets melted down, and they get the cash from that perspective. So it's an incredible asset to have. More importantly, it's free carry. So it multiplies as these big companies find more gold. Your 1% applies forever into perpetuity. So it's just an incredible asset. And there's only 8 real companies in the world or public companies in the world that can give you this exposure. And Metalla, which trades on the New York Stock Exchange under the symbol MTA, is about the smallest high growth option that there is.
Okay. Is there a difference between royalty companies and streamers?
Royalties and streams, the end result, they give you the same exact thing. Streams are a new structure that was created in the early 2000s. It's a bit more tax efficient. I would say royalties are the safest version from a stream, or they're much safer than a stream because you own that interest on title. It's registered on title, just like real estate, that every single ounce that comes out of the ground, you get 1 or 2 or 3%, whatever your royalty rate is. And that's what makes these assets so exciting and, more importantly, safe.
Okay. And can you tell us about some of the companies in your portfolio?
Sure. I mean, our portfolio is filled with the largest diversified global precious metal producers in the world. We've got exposure to Pan American Silver, to Barrick, to Newmont, St. Barbara. The list goes on. And that is one thing you really want to pay attention to when you own a royalty company. You want to own royalty companies that have exposure to not only great projects across proven geological trends, which is critical, but also very strong operators. Because as the royalty company, we don't operate anything. We don't mine anything. We don't do anything in regards to the movement of that rock and processing it to get the gold out. We simply collect that % or 2 off the top. And we want to do that through the largest operators because they have the biggest balance sheets, they've got the best skill sets, and they usually own the best assets across these proven geological trends.
Okay. Now, so tell us about the landscape of the junior mining sector right now, because you're obviously very involved in that sector. Are they looking for capital right now? Are they capital hungry? Are they looking to partner with a royalty company, for example? How does the landscape this summer, differ from what we saw last summer when gold rose to all-time highs?
Well, what I can tell you that's even more important is investor sentiment today is almost the worst I've ever seen it. There are very few investors that are owning precious metals right now, that are buying any of the mining equities, and the ones that do, even the ones that are specialized, they're getting significant redemptions. It's very clear that a lot of capital has been sucked out of the precious metals sector that went into cryptocurrencies. And people call Bitcoin digital gold, but every time I see it on the internet with an article, they've got a gold coin. It has nothing to do with gold whatsoever. And so, I think owning the ultimate form of digital gold is going to be a lifeline in the future, at some point. And royalty companies, like I said, there are a handful of them. But I mean, what I can say is that if you take the top 8 royalty companies, combine them into one market cap, it's still less than Dogecoin. So that just put things in perspective. Like here, you've got just an unbelievable asset class, or a sub-asset class, if you will, and you put all of them together, which gives you exposure to gold in the ground across the entire globe, and it's got a market cap less than Doge. I think when the public finally and wakes up to the fact that there is this ultimate value here, in a form that is not cumbersome. It is cumbersome to own physical gold. There's huge margins that you pay and premiums when you sell it, when you buy it. You can't have a backpack full of gold and walk across borders anymore. But you can own $100 million worth of royalty companies and get on a plane and go across the world. No one's going to care. It's just like a security, like any other asset class, but it gives you that direct link to that physical gold in the ground, which is so amazing.
Does Metalla also pay a dividend?
Yeah, I mean, Metalla doesn't pay a dividend today. We have paid a dividend in the past, and we're looking to pay a dividend in the future. But what we're focused on right now is growing our business. We've been one of the fastest growing royalty companies since inception. We've completed 24 transactions. We've deployed a little over $150 million. We've got 68 royalties. Like I said, across the safest jurisdictions, the most proven geological trends that are being operated and advanced by the biggest mining companies. And these mining companies, they're spending hundreds of millions of dollars on these assets for the benefit of the royalty holders. And this goes for all royalty companies. These assets are free carried. So when the mining company spends $200 million expanding the mine life for another decade, the royalty company gets that benefit, but they're not out of pocket any of that capital to get that benefit.
All right, fantastic. Well, Brett, I appreciate your insights and for giving us an update on your company. I look forward to speaking with you at some point in the future. Thank you very much.
Thanks for having me on, David.
And thank you for watching Kitco News. I'm David Lin.